How's it going, traders? Going to do something a bit different today, talk about trading plans and the importance of having one. So if you've read Andrew's book, you understand that day trading is a serious business, and that's what it is. It's a business. You're an entrepreneur. You work for yourself, right? You invest your time, you invest your efforts, and you risk your capital every day in order to seek a profit in the markets. There's a high chance of a loss, right? People with regular jobs, they don't go to work and come home with less money. That's not a risk they face. That's something day traders face every single day. And more importantly is that, if you're trying to start a business and you have no experience in it, you're going to need a plan. You're going to need a roadmap. You're going to need a vision. What's your objective? What's the market look like? Who are your competitors? What are the profit margins? What are the projections? Etc., etc. And if you walk into a bank and try to get a business loan and you don't have a plan, they would tell you to leave out the front door. They wouldn't take you seriously. And the same with day trading, guys. If you don't have a trading plan, how are you trading seriously? You're probably not. You're trading as a hobby, or you're flying by the seat of your pants. And when you're a beginner in trading, you need these structured guidelines, these rules, these roadmaps, whatever you want to call them. You need this stuff in order to prevent you from making damaging mistakes that will put you out of business forever. Okay, so this is the plan that I've come up with here. It's divided in a number of sections, and I'm going to go over them. So the first is money and risk management. How much are you going to risk per trade? Dollar amount or percentage amount? Depends on you. Or maybe you're doing hotkey based on buying power. I've seen people do that. Buy 20,000, buy 50,000, or maybe you're doing fixed share size, 500, 1,000. Personally, 1% of my account. I trade in risk units, right? You hear me talking about that all the time. R's, 1R. That's the same every single trade I'll take, because I was sick and tired of catching 2 winners and 1 loser, right? 67% accuracy, and I'd be break even because every trade was risking a different amount, and the winners were coming out smaller than the losers. It just didn't make sense to me. So 1. I'm allowed to scale up after being consistent for X number of weeks. Because when you're first starting out small, you're trading very, very small, right? $25 risk, $50 risk. Yeah, nothing more than that, right? And then you want to figure out, when am I supposed to scale up? You should scale up for the right reasons as you're doing better, not for the wrong reasons, not because you have to chase back losses. You'd never see a restaurant doing that, right? Trying to chase back their losses by making more food or whatever it is, right? That wouldn't even make sense. So some people have a rule, 5 green days in a row. Some people do, maybe if they're green 4 out of 5 days, they'll scale up after 2 weeks, 4 weeks, whatever. Personally, I don't do that anymore. I'm at a point where I risk 1%. As my account grows, I risk more in terms of dollars, but the same percent. If my account decreases, I risk less in terms of dollars, but the same percent. It's all proportional to your account. Okay, next is your daily profit target. What do you, this actually reminds me of a question someone asked in the mentorship program. They said, if our goal is to trade well, we're not supposed to think about the money, not look at the P&L, hide that and all that stuff. Why do we talk about daily goal and daily max loss in dollar terms? Well, those are just cutoff points, right? When do you stop for the day, guys? When do you stop? We're not hell-bent on getting our daily goal, right? If the market's not there, we just need to stop. But we should have a stopping point. You don't want to risk giving it back, especially max loss. You need to figure out when to stop for the day. And that's what the daily goal is. So for me, it's 1 to 2%, 1 to 2%. And for daily max loss, it's 2%. I don't want to ever have a red day wipe out more than 1 green day. That's what it is for me. Figure out what it is for you guys. Right? As a beginner, 0.5 to 1% should be your goal. That should be your goal in the long-term average. Next, do you have platform risk controls enabled? I do not. I used to have all the risk controls enabled. The share cutoff, the time cutoff, and the dollar cutoff. Eventually, I wanted to break away from that. I wanted to develop the discipline myself, right, to build those reflexes and those habits so that I didn't have to depend on the system to do it for me. But for all the beginners out there, I really encourage you to do this. You need to protect you from yourself, right? Protect you from yourself, from harming yourself, because when you're out there in the beginning, the mistakes are magnified. So, eventually once you break away from that, gradually take off the risk controls, gradually, and to the point where you've developed that muscle, right? If you don't develop the muscle, it's going to turn into mush. Next, I'm allowed to take I'm allowed to take 2 to 3 trades a day. That's for me, right? That may seem pretty low for some people, but that's my style. Some people do 5, maybe 10, 20, depending on your strategies. There's got to be some number there, or else you're just going to be paying a ton in commissions. Okay, my break-even win accuracy, we're going to get into that later, where that's important, is 33%. Actually, let's run the numbers now. Let's run the numbers here, okay? 33%. And you often hear people say this. When you're in business, you got to know your numbers, right? If you run a business, you have to know the math. Day trading is no different, guys. No different, okay? So let's talk about 100 trade sample size here. 100 trades. We're going to have different outcomes here. We're going to have break even, right? Break even, and then we're going to have 50% return, so plus 50R. Okay, so if you're realizing 2R per trade, right, like I do. What's my break even? I only need to be right 33% of the time, right? Each winner will pay for 2 losers. Next, if you're doing 1.5R realized, okay, what's your break even? Do the math, it's actually 40%, okay? And then 1R, your break even is obviously 50%, okay, fine and dandy. Let's talk about 50 Rs. In order to return 50 Rs after 100 trades, if I'm doing 2 to 1, I need to be right only 50% of the time. See how that works out? 50 times I'm right times 2 is 100, minus the 50 times I'm wrong is 50. My accuracy for 1.5R is actually 60%, right? 60 times 1.5 is 90, minus the 40 times I'm wrong is 40%. And then 1R, that's 75%. See that? See how that works? So the less you make on terms of realized reward, obviously, the more accurate you need to be. 75 is pretty hard to do, guys. So this is one of the reasons why you need to know your numbers. If you're scaling out too fast, you're coming out with 1R, you need to be 75% accurate to have the same profitability as this one. Let's do something fun here, okay? So 50% is, what did we say? 2R at 50% was 50 Rs, right? Look how thin the margins are. These are razor thin. This is like retail stuff, right? If I were to go 60%, what do you think I'm going to return? Pause the video and do the math. It's 80 Rs. 80 Rs, right? So I'm right 60 times 2 is 120, minus the 40 times I'm wrong is 80 Rs. See, that 10% increase in accuracy leads to 30 more Rs. That's 60%. Let me repeat that. 10% accuracy increase leads to a 60% profit increase. Razor thin, guys. Understand these numbers, okay? Enough rambling about that. Next is when do I stop trading for the day? I stop trading or wind down when the clock reads 11 o'clock, right? That's what you're supposed to do. Use the black and erase this stuff here, but I stop at 11, 11:30, depending on what the market's doing. I don't go past that. I don't trade lunchtime. I don't do any of that stuff. Figure that out for yourself. Next, strategies and patterns, okay? So this is kind of diving down the individual strategies and patterns. What are we looking for every day? Well, first you got to define when are you trading. I don't trade the first 2 minutes, right? That's a rule I have. It used to be 5 minutes, but now I'm taking these orbs, so I don't do the 2 minutes. Some people don't trade the first 30 minutes. Figure out what your time frame is, right? Next, I trade stocks with at least X million share afloat. 30 million. That might seem random, this question, but it's actually not. Andrew talks about this all the time. If you are trading penny stocks, mid floats, and mega caps and all this stuff, you know, the penny stocks, you win 10%, but if you lose, you're losing 10%. And then you catch a winner on a medium float, you make 2%, and the results are just all over the place, right? And Andrew says some of the reasons why you're not consistent is because you're not trading the same types of stocks, right? So 30 million, and I don't do low floats. Next, let's talk about the price of the stocks you trade. This is just comes down to preference. I don't do anything below 10, and for the max, it's around 300. I used to be really reserved with the max, but now that I use the hotkey to automatically calculate the share size, it's pretty good there, right? And depending on how volatile the stock is, I usually take less based on the price action and the hotkey, etc., etc. On the lower end, I don't want to deal with taking 7,000 shares and paying crazy commissions, right? So it depends on you, right? What's your range? Next, let's go over to this side here, is my main setups, right? So each play that you do, I do orbs, I do ABCDs or flags, whatever, and reversals, top and bottom, right? Each play has its own criteria, right? This is why I talk about go to the playbook for more information, right? So you hear people say you plan the trade and trade the plan. Well, each setup should have similar types of criteria or signals. Okay, I'm going to go short here. When it breaks out from the body, my stop's the VWAP. If 5 minutes goes by and we don't break this level, I'm going to get out at break even, etc., etc., right? These are the micro strategies that you're using for each and every play. So take a look at our forums. We have a playbook out there for anyone who needs a template so you can develop that for yourself. Next, trade management. This comes back to you, your personality, right? Everyone manages their business differently, and no differently, you should manage your trades differently, right? I take, how much percent you take off in each partial? I do 100 because I don't partial, right? I don't partial. It's going to depend on you. You do 25% of remaining, 50% of remaining. Are you doing it in halves? One half after 1R, one half after 2R, whatever the case. Figure that out. Or maybe it's by strategy. Each strategy has different partial rules, right? You can expand upon this. Next, I move my stop to break even after taking partials. Personally, this is NA for me, right? Is it for you? I know some people who do. It's a really good rule. Don't let a winner turn into a loser. I know some people who don't. They will take a partial and they'll respect their original stop because they know pullbacks are likely, right? And often pullbacks are just, they'll test your break even and then off they'll go. You're going to miss the move, right? So it depends on you. Next, I seek a realized return of how much you're risking. 2. For me, it's 2. I am looking for 2R, right? 2 times the amount I risk. And that comes back to the profit margins. What are you looking for? What is your, you have your expected return, what you're aiming for on the charts, and then you have your realized return. Your realized return is going to be a function of how you manage your trades. If you're scaling out like a madman before you hit 1R, you're going to come out with 0.7R on the winner, and do the math. You're not going to. It's going to take a very high accuracy to be profitable. Okay, so figure that out. What's your risk to reward? Next, my stop losses are mental or hard. I do hard stops. I use range orders. This is huge too, right? Because your accuracy means nothing. You can have 99% win rate. If that 1%, if that one loser runs against you $47, then you're done, right? You're done. So stop loss management, huge part of trade management. Okay, now let's get into a little bit of the softer side of things, right? It's your accountability. Accountability is huge in this game, guys. I talk about it, and we're going to be talking about it in upcoming podcasts here, right? There's no one looking over your shoulder, right? If you can't follow this plan, if you can't follow these rules, then you're toast. You might as well just pack it up, right? So remind yourself, following your plan is important since, right? Why? Because if I don't follow this, I won't be able to trade. I won't be able to quit my job. I won't be able to have the freedom I want, etc., etc. Every reason is going to be different. Next, what are some? What's your motivation? I can do this because, well, I can do this because I'm disciplined. I can do this because I have the technology, the tools to help me. I can do this because I'm surrounded by, good trading buddies, whatever. Fill that out. Next, when I feel like deviating from the plan, what are you going to do? I have reminders all over my desk, right? If I feel like getting greedy and not taking my profit after 2R, I look over at that chart right there, the Tesla chart. What did it say here? It says I turned $500 into $5 because I got greedy. Never again. Right? Maybe you have a picture of your family. You need some reminders for that. Maybe you have a clock. I've seen people put $100 bill on their desks to remind them how real the money is. Right? It's not a number printed on the screen. This is hard-earned cash. Right? So figure that out. Next, when I break a rule or violate a trading plan, what's the consequence? You have to have a consequence, guys. If you just lie to yourself and promise yourself, I won't do it again. Let's just forget about it. Come back tomorrow. You're not going to learn a thing because no one's checking up on you guys. For a lot of people, day trading is a dirty little secret, right? You do dumb things. No one's looking over your shoulder. No one's knocking on the door. Hey, Robert, how's that thing going? Oh, I'm averaging down. I haven't stopped out. I'm turned into a swing trade. Very, very, very dirty little secrets, guys. People talk a lot about their winners, not about their losers. You want your losers to be good setups, decent setups that didn't work out. And you got to punish yourself for breaking these rules, guys. What are you going to do? Do a video journal? Maybe you have to do that. Maybe you have to share the trade with a partner, accountability buddy. Maybe you send yourself back to sim. Maybe you limit yourself, etc., etc. Right? You got to have consequences and what's the word? Positive reinforcement, negative reinforcement, whatever that is. Okay, and then date and sign this thing, right? This is serious. This is, despite how cartoonish everything is, this is serious, guys. It's a trading plan. It's going to help a lot of the beginners out there for you to survive the curve and give you some structure. Feel free to modify it, all that stuff. But this is the most important part, is the witness. The witness, guys. Find accountability buddies. Find someone in the chat room. Find a mentor. Find a partner, whatever it is, right? And have them sign off on this with you. And check up with them every day. Be truthful, be honest. You have nothing to gain if you lie to them, right? Nothing to gain, right? So do that. Anyways, if this video gets 100 likes, I'll put this template out there on the website. You guys can download it. If it gets one dislike, even just one dislike, I'm going to delete it from my computer and erase my hard drive. Thanks for watching. See you guys in the room.